Hi everyone. Welcome to Tax Guru YouTube channel. This is CA Rohan Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. Hope all of you are fine. I'm also fine. And today we are discussing part 2 of GST Relearn series. Yes, and today's topic is charge of GST. In part 1, we had discussed important definitions of important definitions under GST and supply under GST. And now in today's topic, today's video, we will discuss charge of GST in very simple and lucid manner. Let me allow to share my screen. Charge of GST. In today's session, we will cover section 9 and section 10. And under section 9, subsection 1, subsection 2, subsection 3, subsection 4, and section 10. So this we will cover in today's topic. So let's start with it. Charge of GST. Introduction to the charge of GST. Goods and service tax is a comprehensive destination-based indirect tax levied on the supply of goods and services. It is important. It is means its implementation has some various central and state taxes, creating a uniform tax structure across the country. This is I'm giving little bit of introduction of GST to all of you. What was happened? Okay, so first, GST is a comprehensive and destination-based indirect tax. It is levied on supply of goods. It is levied on supply of goods and services. Its implementation has somewhat various central and state taxes, creating a uniform tax structure across the country. That is, motive is one country, one tax, like that. The primary provision regarding the charge of GST is laid down in Section 9 of CGST Act 2017, and the composition scheme for small taxpayer is elaborated in Section 10. That is why I have told you before the start of the topic that we are covering today Section 9 and Section 10 under the charge of GST. Okay, let's start with it. Section 9 of CGST Act. Charge of GST defines when GST becomes payable and who is liable to pay the tax. What it defines is when GST becomes payable and who is liable to pay the tax. When GST becomes payable and who is liable to pay the tax. It is foundational to understanding when and how tax must be collected or paid under GST. The charge of GST determines when and how GST is levied on taxable supplies. What word is used? Taxable supplies, because supplies which are not taxable, GST not levied on that. So charge of GST determines when and how GST is levied, and that is also on taxable supplies. Section 9 of the CGST Act is the charging section. Charging section is section 9 for CGST and deals with the levy and collection of tax. Section 9, levy and collection. That is section 9, subsection 1, forward charge mechanism. And short form is FCM, forward charge mechanism. Section 9, subsection 1. What it talks about? GST is levied on supply of goods or services. Supply of goods or services or both on the value determined under section 15. We will cover this in the next two next topics. So GST is levied on the supply of goods or services or both. Today we are just talking about the charge of GST. Okay. So focus on that particular aspect. GST is levied on supply of goods or services or both on the value determined under section 15, levied at rates notified by the government on the recommendations of the GST Council. GST Council meetings always held some time in between the time gaps, certain 1 month or 4 month or 6 months, and in that number of issues were discussed, and then they recommend to the government, and then government take the action on that. So levied at rates notified by the government on the recommendations of the GST Council. Maximum rate of CGST is 20%. That is SGST 20%, IGST would be 40% in that case. Tax is collected by the supplier of goods or services and paid to the government. Okay. Who collect the tax? Tax is collected by the supplier of the goods or services. Tax is collected by the supplier of goods or services, and then they paid to the government. Applies to regular registered taxpayers. Applies to regular registered taxpayers. This subsection states that GST is levied on all intrastate supplies of goods or services except on the supply of alcoholic liquor for human consumption. What this subsection talks about, that this subsection states that GST is levied on all intrastate supplies of goods or services. Intrastates mean within the state. For example, Maharashtra state means whatever supplies of goods or services within the state of Maharashtra would be called it as intrastate supply. Okay, but except on the supply of alcoholic liquor for human consumption. Okay, GST is not levied on that till the date. The tax is to be paid by the supplier. Tax is to be paid by the supplier, which is termed the forward charge mechanism. Okay, why it is called forward charge mechanism is that here tax is paid by the supplier of goods or services. Let's see a few of examples to understand the concept very truly. A wholesaler sells goods worth rupees 1 lakh. A wholesaler sales goods worth rupees 1 lakh to a retailer in the same state, that is within the state, intrastate. GST is levied at 18%, that is 9% CGST and 9% SGST, that is total comes to be 18%. The wholesaler collects how much? Rupees 18,000 as GST and deposit to the government treasury. Means on 1 lakh, 18% will come rupees 18,000. Okay. Then ABC Traders, a registered dealer in Delhi, sells 10 shares worth rupees 10,000 to XYZ Private Limited, also in Delhi, again within the state of Delhi. GST applicable at 18%. ABC Trader collects rupees 1,800 as ABC Trader is supplier. Okay, he sells 10 shares worth of rupees 10,000 to XYZ Private Limited. So ABC Traders collect 1,800 as GST from XYZ Private Limited, and then it will deposit to the government. Next, XYZ Consultancy based in Delhi provides management consultancy worth rupees 50,000 to a client in Delhi. That is again intrastate. Applicable GST will be 18%. Then XYZ raises invoice for rupees 59,000. That is 50,000 plus 9,000 GST. That is 4,500 CGST and 4,500 SGST. Okay, clear? Then we will move to section 9, subsection 2, that is levy on petroleum products. Section 9, subsection 1 talks about forward charge mechanism. And now we are discussing section 9, subsection 2, levy on petroleum products. GST doesn't apply to 5 specified petroleum products. How much? How many? 5 specified petroleum products until the government notifies it. And these 5 specified petroleum products are petroleum crude, high-speed diesel, motor spirit, that is petrol, natural gas, aviation turbine fuel, that is ATF. Which are the 5 specified petroleum products on which GST doesn't apply until the government notifies it? And they are petroleum crude, high-speed diesel, motor spirit, that is petrol, natural gas, and aviation turbine fuel, ATF. These are taxed under the existing regime of excise and VAT. Okay, means their excise and VAT is still chargeable, but that is by state level, at state level, and it will, the rate will may vary, and it will not be a one unit tax rate, one unit tax rate. So these are taxed under the existing regime of excise and VAT till date. However, GST Council may bring them under GST purview in future as notified by the government. This subsection, that is section 9, subsection 2, empowers the government to notify the levy of GST. Means this subsection empowers the government to notify the levy of GST on petroleum crude, high-speed diesel, motor spirit, and natural gas and aviation turbine fuel at a later date. Until such notification is issued, these goods are not leviable to GST. Okay, this subsection empowers the government to notify the levy of GST on all these 5 items at a later date, and until such a notification is issued, these goods are not leviable to GST. Example, IOCL sells petrol in Gujarat. Okay, IOCL sells petrol in Gujarat. VAT is levied by Gujarat state and excise duty by the central government. Okay, no GST is levied on petrol as of now. Understood? Let's move on to section 9, subsection 3, reverse charge mechanism. RCM on notified supplies. Okay, we have just covered section 9, subsection 1, forward charge mechanism, where supplier is liable to pay the tax. Okay, now we are moving to section 9, subsection 3, called it as reverse charge mechanism, RCM, on notified supplies. Okay, let's move on. The government may notify certain supplies of goods or services on which, means what, government may notify certain supplies of goods or services on which the recipient of supply is liable to pay GST and not supplier. That is the main difference between the forward charge mechanism and reverse charge mechanism. In forward charge mechanism, supplier is liable to pay the tax, whereas in reverse charge mechanism, recipient is liable to pay GST. Okay, it ensures tax coverage even when the supplier is unregistered or exempted. It is because why it is introduced is that it will cover if the supplier is unregistered or exempted, and recipient will be registered supplier, registered under GST. So he can pay the tax to the government. So there are the services, or there are few of the uh, situations where it can be covered, means its coverage would be wide. So government is thinking to cover the means wide the scope of this levy of GST, so that revenue of the government will increase day by day. So it ensures what tax coverage even when the supplier is unregistered or exempted. So if recipient is registered, he will pay the tax to the government on such notified goods or services. Under this section, recipient of goods or services is liable to pay tax and not the supplier. Applies only for specific categories notified by the government. To whom it is applied? It applies only to specific categories notified by the government. The government, on the recommendation of the council, here also council will recommend to the government, may notify categories of supply of goods or services where tax shall be paid by the recipient under reverse charge mechanism. Let's see common examples of notified services till date. Legal services provided by an individual advocate. Legal services provided by whom? Individual advocate, and not the firm of the advocates. Individual advocate. Services supplied by goods transport agency. Sponsorship services supplied by director to the company. Means in that case, company will be liable to pay tax. Services from government to business entity, means in that case, business entity will be liable to pay tax. These are the 5 common examples of notified services, which are legal services provided by whom? Individual advocate and not the firm of advocates. Services supplied by goods transport agency. Sponsorship services supplied by a director to the company. Services from government to business entity. Let's see examples. XYZ Limited, a registered company, avails legal advice from Mr. Sharma. Here he is individual and advocate. Mr. Sharma raises a bill for 30,000, no GST charge. XYZ Limited, that is recipient, must pay 18% GST under RCM and can claim ITC if eligible. Okay. Another example, gold purchased by a registered jeweler from a notified seller under RCM, GST to be paid by the buyer. Gold purchased by a registered jeweler from a notified seller under RCM, GST to be paid by whom? The buyer. Benefits of it. Ensures tax is paid in cases where supplier is exempt or unregistered. Means motive is to wide the scope of the taxation. That is the, yes, broadens tax base. Exactly what I want to say is broadens the tax base. Government want to broaden the tax base and collect more and more revenue. Okay. And that is the benefit of the RCM. Compliance requirements. Recipient must raise self-invoice if supplier is not registered. Okay. Recipient must raise a self-invoice if supplier is not registered. Payment of tax in cash and no ITC for payment. Here we cannot use our ITC to pay the tax. We have to pay this tax under RCM by cash only. Okay, and then recipient can claim that ITC on RCM paid subject to conditions. Means we can claim that ITC subject to few conditions satisfied. Okay. Now moving on to the next section, section 9, subsection 4. Again RCM, but RCM on supplies from unregistered persons. Okay, RCM on supplies from unregistered persons. Okay, means earlier in subsection 9, subsection 3, we have seen the case that the both are registered, but maybe okay. Now in section 9, subsection 4, we are covering RCM on supplies from unregistered person. Okay. What is that? Let's see historical development under means related to this section 9, subsection 4. Initially applicable to all supplies from unregistered to registered persons. Okay. Means when this act came in that initial stage, it was applicable to all supplies from unregistered to registered persons. But what happened was that it caused compliance burden and hence restricted to notified persons and supplies only. Means then government has to consider the representations made by the businessmen, the professional, and then they again restricted this to the notified persons and supplies only. It was reintroduced in a restricted and notified manner via notification number 07/2019 Central Tax dated 29th March 2019 and subsequent clarifications. Current position. Let's see what is the current position, that is post amendments in section 9 subsection 4. Applicable only to notified class of registered persons, most common in the real estate sector. Where it is common to real estate sector, only applies if supplier is not registered and recipient is registered and services and receives notified goods or services. Very important. When it only applies if supplier is not registered and recipient is registered and receives notified goods or services. I mean, these both conditions need to be satisfied under in second point. Recipient is registered and received notified goods or services, then only it applies. Okay. And this section applies when a registered person receives goods or services from an unregistered supplier. Let's see the examples. A builder promoter buys sand from an unregistered supplier. Builder is liable to pay GST under RCM for this supply under section 9, subsection 4. Now it will be clear to you with the example. A builder promoter buys sand from an unregistered supplier. Builder is liable to pay GST under RCM for this supply under section 9 subsection 4. As builder is a registered person, supplier is unregistered, and sand is notified goods under that particular section. Practical consideration is that adds compliance burden for registered recipients and input tax credit available on tax paid under RCM. These are the practical considerations. What compliance burden for registered recipient will be added and an input tax credit available on tax paid under RCM. So before moving to section 10 composition levy, we will just revise what we have studied till now. We have studied under charge of GST, that is section 9, and we have covered section 9, subsection 1, subsection 2, subsection 3, and subsection 4. 9 subsection 1 talks about forward charge. Section 9 subsection 2 talks about RCM. Section 9 subsection 3 and 4 talks about notified RCM, right? Oh, subsection 2, that is section 9, subsection 2 talks about levy on petroleum products. I'm really sorry for that. Section 9, subsection 1 talks about forward charge mechanism, where supplier is liable to pay the tax. Section 9, subsection 2 talks about levy on petroleum products, that is the 5 items which are still out of the GST. Then section 9, subsection 3 and subsection 4 talks about reverse charge mechanism. Okay, clear? And now we will move to section 10, that is composition levy. Let's see what it talks about. Objective of composition scheme. What are the objectives of composition scheme? To reduce compliance burden for small taxpayers, to simplify tax payment procedures. This an alternative levy for small taxpayers to simplify compliance. Means important objective is to reduce the compliance burden for the small taxpayers. Okay. Let's see what is the eligible criteria for them under composition scheme. Aggregate turnover in the preceding financial year. Okay, aggregate turnover in the preceding financial year means if you want to see for financial year 25-26, we have to check data for financial year 24-25. Okay, so aggregate turnover in the preceding financial year should not exceed, okay, turnover, aggregate turnover, it includes everything. In preceding financial year should not exceed rupees 1.5 crore in case of normal states and rupees 75 lakhs in special category states. You can see, means this list can be available on all platform. Okay, that is not the very important for the time being for to study. Just be clear that some of the states are where the 1.5 crore is notified, and for special few of the special category states where turnover limit, that is threshold limit, is kept at 75 lakhs. So aggregate turnover in the preceding financial year should not exceed to rupees 1.5 crore or 75 lakhs, whichever is applicable as per state rules. Should not be engaged in interstate outward supply. I mean, supplier should not be engaged in interstate outward supply. What is mean by interstate? Means between the two states. Means, for example, between supplier is registered in Maharashtra, it cannot sell to to anybody in Gujarat state or any other state. So this is the restriction for them who is availing the composition scheme. Then again, should not be supplying goods through e-commerce operators. Also, the another eligible criteria is that they should not supply goods through e-commerce operators, and they can pay tax at prescribed lower rate without availing input tax credit. Means they cannot avail input tax credit. Okay, means the flat rate they have to pay the tax. They cannot claim, they cannot avail any ITC on whatever they have purchased. They cannot supply through e-commerce operator. They cannot engage in interstate outward supply, means between the two states. And the aggregate turnover in the preceding financial year should not exceed rupees 1.5 crores or 75 lakhs, whichever is applicable as per state wise. Let's see key features of it. Key features of this composition schemes are cannot collect tax from customers, cannot collect tax from customers, cannot claim ITC, and must pay tax on total turnover, not just taxable turnover. Okay, must pay tax on total turnover, not just taxable turnover, and can file and required to file CMP 08 quarterly and GSTR 4 annual. That is the key features of the composition scheme, that cannot collect tax from customers, cannot claim ITC, must pay tax on total turnover, not just taxable turnover, file CMP 08 quarterly and GSTR 4 annual. And also one thing that a composition dealer cannot issue tax invoice. They have to issue bill of supply. Let's see examples. Ravi Electronics opts for composition scheme. Sales within Maharashtra, turnover 90 lakhs within the threshold of 1.5 crore, cannot sell to Gujarat, cannot claim input tax credit on purchases. Okay, that's the necessary conditions to be satisfied. Let's see the categories and applicable rates. Okay, category manufacture rate is 0.5, 0.5 and total GST 1%. Traders, that is goods, 0.5, 0.5, that is 1%. Restaurants not serving alcohol. Restaurants not serving alcohol, rate is 2.5, 2.5, that is total GST is 5%. We are discussing the composition rate under, these are the categories under composition levy. Service providers, section 10, subsection 2A, rate will be 3%, 3%, total GST 6%. Okay. Let's move on to section 2, section 10, subsection 2A, that is composition scheme for service providers. We discussed composition scheme for suppliers of goods. Now we will discussing composition scheme for service providers. Introduced for suppliers providing services or mixed supplies. Turnover threshold limit will be rupees 50 lakhs and not 1.5 crore or 70, but threshold limit is 50 lakhs. Rate is 6%, that is 3% CGST and 3% HGST, that is rate 6% for the composition scheme for service providers, and it cover under section 10 subsection 2A. Let's see example. A freelance graphic designer earns rupees 40 lakhs, which is within the limit of rupees 50 lakhs, pays 6% GST, that is 2.4 lakhs on rupees 40 lakhs. 6% on directly 40 lakhs comes 2.4 lakhs. Cannot collect tax separately or claim ITC. What conditions need to be satisfied? Cannot collect tax separately or claim ITC. Let's see key conditions and restrictions under the composition levy. Cannot collect tax from customers, cannot avail input tax credit, cannot collect tax from customers, cannot avail input tax credit, must issue bill of supply. Very important. Cannot issue tax invoice. I have said earlier to you that the composition dealer cannot issue tax invoice. It must issue bill of supply. Cannot undertake interstate supplies. That is the supply between the two states. For example, between the Maharashtra and Gujarat. Let's see advantages of composition scheme. Lesser compliance, simplified returns, predictable tax liability. You can predict what the tax liability you can be required to pay. There are disadvantages or limitations to that. No input tax credit, then means it will be a cost to you. Limited to intrastate supplies. Yes, your business will limit it to only one state, that is between the within the state your business will restrict. Means you cannot grow your business by selling or supplying to the other state. If you want, then you have to come out from the composition scheme to the normal tax provision. So, and they're not eligible for specific business sectors, that is ice cream, pan masala, tobacco. Okay, for this business sector, it is not applicable. That is ice cream, pan masala, and tobacco. Let's see the example for as a comparison. Regular scheme and composition scheme. So we will be very clear. Invoicing under regular scheme, tax invoice under composition scheme, bill of supply. ITC under regular scheme available, under composition scheme not available. Filing regular scheme monthly plus annual, under composition scheme quarterly plus annual. And the rate under regular scheme vary from 5 to 28%, whereas in composition scheme, rate will be 1%, 5%, and 6%. Very straightforward. This difference will, this comparison will clear your concept very clearly manner. Invoicing, regular scheme, tax invoice, composition scheme, bill of supply. ITC available under regular scheme, composition scheme, ITC not available. Filing under regular scheme, monthly plus annual, whereas in composition scheme, filing will be quarterly plus annual. And rate of tax in regular scheme varies from 5 to 28%, whereas in composition schemes, they are 1%, 5%, or 6%. So that's it for the today, that is section 10. Let's see what conclusion we can draw from the topic. That the conclusion is section 9 outlines the core principles of how GST is levied and collected. What section 9 outline is, section 9 outlines the core principles of how GST is levied and collected. Forward charge is the default mode, with reverse charge applicable in special cases. Composition scheme under section 10. Composition scheme under section 10 is a boon for small taxpayers to easy compliance. A clear understanding of these provisions helps ensure smooth GST implementation and avoid legal complications. This is what we have learned today. Hope this learning is helping you, helping all of you, because my motto for this video series is to it can understand by every one of you. So that is the main motive under this video series, this GST Relearn series. Hope be connected to Tax Guru YouTube channel. If you like this video, please click on like and share with everyone in society so it will reach to mass. Okay, we will meet in next video. If you are not yet subscribed Tax Guru YouTube channel, then do subscribe for latest updates. See you soon.